Hi there. Good morning. Welcome to the trade setup right here on BloombergQuint Live. It's after the long weekend, and we are set for a good start. Remember, for this week, inflation data from across the world will be making the headlines as more countries will publish their CPI numbers, and I think everybody will be watching out for that. Other than that, in terms of macro data across the world, I don't quite know. Maybe people will look at commodity prices and we'll talk about that a little bit as well. But let's wait and watch. Some flash PMIs for October and some GDP releases would be important too. By the way, speaking of GDP releases, China data has come out, and I think it's important to look at that. It is no surprise really that the Chinese GDP numbers have shown a bit of a slip, if you will. So the economy did cool off in the third quarter of the current year as far as China goes, and that chart tells you a thing or two about what's happened. The only point is it's not a surprise at all, and I don't know if it has a material impact on how the Indian markets per se perform. So you got to keep that in mind. There's also, of course, the news reports, or rather not news reports, but the outcome which shows that the US is now a larger trading partner of India than China, and that's happened very, very recently as well. So pretty interesting what's happening. Speaking of the US, the markets did reasonably well on Friday. Now let's focus on the markets. The markets did reasonably well on Friday's session, and therefore the start from the Asian screen seems to be promising. We had a holiday, of course, for Friday, so we account for all of that. But Asia and the SGX Nifty will next come up on your screen to just give you a sense of how we are slated to start off. It's a mixed bag, but a larger tick on the upside. So that seems to be promising. Let's get the SGX Nifty and try and figure out what that is indicating. Remember, we shut at about 18,330 odd for the Nifty, and it suggests that 18,428. So maybe a start which is a bit more promising than what the SGX Nifty seems to be suggesting. So a start in the green for sure. The question is, can we take on from there? There are some components which indicate that we might, and I'll come to those in a moment. Just a quick snapshot of what happened in Thursday's session for our markets before we move on to the trade setup and the chart from Dr. C.K. Narayan's weekly copy on BloombergQuint. If we can get the MOE function there, the market breadth was not too bad. A bunch of stocks did reasonably okay, including companies like IRCTC. But I think today some of the real estate names and infrastructure names will continue to remain in focus. So I think that is what all of us should be keeping an eye out for. Remember, companies which have had these ASM or trade to trade or some other circuit filter changes have had some issues in the recent past. The likes of Nazara, for example, it's down at 2769 from highs of maybe 3200 or thereabouts. We've seen that happen to the newly listed Paras Defense as well. 3 or 4 lower circuits in a row before the circuit limit getting filtered changed, and I think it will have some impact today. So I think all of those remain in focus. The trade setup though for today or for this week maybe, and I think CK's piece suggests that the way the market has moved up, and save for the weekly scare that we had on Tuesday, we haven't broken convincingly below the trend lines, and I think therefore he seems to suggest that the optimism should stay unless the Nifty corrects below the 16,800 mark. It's far away, but I think the trend line support numbers indicate that that's the level that everybody should be watching out for. Look at this chart that he's indicating. This is the Nifty futures since March 2020 in the RSI chart, which indicates that there is no weekly low which has been broken since the rise from April lows, and therefore people should not get unduly worried about what's happening. I think that number comes to about 16,800. So really long-term trend watchers, that's a number to watch out for. And the momentum remains strong as per the RSI indicators, which is what CK Narayan has observed. So, well, maybe, just maybe, no need to panic despite the markets doing what they are doing. Keep in mind, it's a very busy week simply because nearly 20% of the Nifty companies come out with numbers, and therefore everybody will be watching out for those heavyweights, including the Asian Paints of the world. HDFC Live comes out on Friday. And Ultratech comes out today. Speaking of numbers, by the way, Ultratech, L&T Infotech, Root Mobile, these are some key numbers to watch out for in the session today. Now, What about the numbers that got released last week? What about the newsmakers? What about the stocks that are likely to react? Let's take synopsis of those. It's a rather long list, but let me quickly run through them. So firstly, HCL Technologies, the numbers came out late Thursday post-market hours. The headline result was below estimates. The EBIT margin performance was disappointing because the revenue performance was disappointing. It just percolated down that way. The good part for HCL Tech was the new deal TCV of 2.3 billion, which was up about 38% YOY, much better than anticipated. And the other positive part was, of course, the dividend payout, which they have spoken about well. So I think that is probably a bit of a cushion. Now, without trying to uh, really second guess what the stock can do, let me try and tell you what brokerages have made. So I'm giving you both the views out here. Motilal Oswal on HCL Tech, uh, a bit more sanguine. They say that we tweak our FY23 EPS estimate by 2% due to a slower pickup in high margin products and platforms business, which was the big culprit for HCL Tech, by the way, this quarter. They say that we maintain our buy rating as we expect traction in the services business in the second half and FY23, driven by higher IMS and cloud-focused deals. Our target price of 1430 implies 25 times FY23 EPS. Their target stays at 1430. CLSA, on the other hand, not as sanguine. They say that the revenue growth miss versus expectations, elevated by positive management commentary. Okay, we've just tweaked the numbers a bit, but what CLSA said that the miss is looking a lot more pronounced because of the positive management commentary going into the quarter. And therefore, okay, no, this is what we wanted to say, yes. So revenue growth miss versus expectations, elevated by positive management commentary going into the quarter, is a third successive slip and could weigh on valuations. CLSA does believe it will weigh on valuations. They downgrade the stock to outperform. The target price has been cut to 1420 from whatever it was earlier. So this is the problem. It's a third quarter of consecutive slip, and therefore what happens, the street has gone into the results short, a lot of short positions out there. So if it opens lower, if it does, then you might well see a bout of covering as well in HCL Technology. So please be mindful of that. If you don't have an existing position and want to go short on it, just be mindful of that there could be a bout of short covering that could come about as well. It is also a bit more reasonably valued than some of the other peers, so you have to keep that at the back of your mind. The other one is HDFC Bank, and almost everybody is very bullish, sanguine about it. I've brought the CLSA note again. They've rated the stock a buy. The target price has been raised to 2025 from 1850. They say that the Q2 results were strong with lower slippages than expected. The growth rebound has been strong and remains the key driver for earnings. Strong earnings growth visible again, according to CLSA on HDFC Bank. Morgan Stanley and some of the others also pretty sanguine about the HDFC Bank numbers. So do watch out for this stock in the session today. Could have a good start. What will definitely have a weak start is PNB Housing. You don't need me to tell you that, but I'm getting you the ISEC note out here. They say that the stock has almost doubled since the announcement of capital infusion in May. And with the deal being called off, the stock is likely to derate again to 0.75 times FY23 book from 1 currently. They expect nearly 25% derating as the earnings and growth momentum would derail. They cut their earnings estimate by 10% and 20% for FY22 and 23, greater than 10% and greater than 20% for FY22 23. And they revised the target price to 485. They downgraded to sell from buy. Morgan Stanley as well has done a similar downgrade. The prices may differ a bit, but yeah, it tells you a story or two about how people will approach this. So no doubt that will start off lower. If you are thinking that, oh, it could bounce back, I just gave you a snapshot of what some of the people who track it believe it will do. So please be careful if you want to do some bottom fishing in PNB Housing. Some other stocks in focus include a Shilpa Medicare, wherein it's raised over 297 crores but from marquee investors at a 564 rupees per share price. So watch out for this one. Malabar Capital, Madhusudan Kela, and some of the others are there. Sangam India, the warrants have been issued to Madhuri Madhusudan Kela and promoter entities. To watch out for this one. Indiabulls Real Estate, result based, is a very strong quarter for the company. Samir Gehlot will be declassified as promoter from January 1st. Maybe the stock has a bit of a reaction, but keep in mind it had already rallied 8% ahead of the numbers. So you have to bear that in mind if you want to trade Indiabulls Real Estate, that some bit of a move has already happened. So just be cautious on that. Mahindra CIE, the net profit up 1.74 times. at 166 crores versus 60 crores. Cyient, revenue growth was below estimate, but the strong order intake might help the company. So do watch out for that. And Macrotech Developers, there's a board meet on October 21st with a proposal to consider a proposal to raise funds, arguably a QIP. The company is in talks to sell 4 lakh square feet office building in Mumbai as well. I tell you, real estate is in focus. Macrotech, Indiabulls Real Estate, and some of the others, certainly stocks to monitor today. And metals certainly have to be monitored today. And Nalco and Hindalco in focus, because Alcoa, after the numbers that got released on Thursday, said that they expect robust Q4, which is the October, November, December quarter, supported by higher alumina prices. The higher shipment will offset the increased raw material and production costs. Very strong commentary from Alcoa. The numbers were higher than estimates as well. And by the way, there's this lovely chart in the BloombergQuint story, which shows how metals have really rallied. Everything from zinc to aluminum has just had a really sharp uptick. Look at that. The white line is LME zinc, blue line is LME aluminum, purple line is LME copper. All of these have rallied, and therefore metals firmly remain in focus today. Everything from a Nalco to Hindalco to a Vedanta, wherein Credit Suisse has upgraded the stock to an outperform with a revised target price of 420 from 285. So watch out for metals. It promises to be a very, very strong pack. And base metals. This time around, we're not talking about ferrous like steel. Steel may do well. I'm not saying no. By the way, there's a Nomura note which says that because of this expected supply crunches, Indian rebar prices have also moved higher. So I'm not saying steel may not do well, but base metals firmly in focus, viewers. Don't be on the wrong side of that trade. That's the limited point I'm making. Everybody seems to be bullish on aluminum, zinc, copper, etc. So just make sure that you're not on the wrong side of the trade. And Tata Power, interesting, has had a really sharp rally, but the Economic Times suggests that the company is looking to raise $500 million for the renewables unit. So that is something that people may want to watch out for. By the way, all commodities are doing well. Oil has breached their $85 per barrel mark. You might want to watch out for the oil upstream companies as well. Could be interesting. So commodities remain in focus. To an extent, real estate remains in focus. HDFC Bank remains in focus. PNB Housing for the wrong reasons. And HCL Tech, just be mindful of the fact that the stock has entered into the results weak, corrected about 4.5% ahead of the numbers already, though TCS has corrected 7% in the last 5 days. So you have to bear that in mind. The Tech Mahindras and the Infosys of the world had a flattish last 5 days. HCL Tech is already entered weak. If it starts off weaker, then maybe the shorts might just come back to cover the profits as well. So just keep that at the back of your mind. But all in all, we expect a steady start for the markets. Let's see if that momentum is maintained. It's a crucial week. 20% of Nifty numbers come out, and therefore it's a crucial week as well. Maybe earnings will determine what happens during the rest of the week. Thanks so much for tuning into the Trade Setup. Have a safe day ahead. And if you're stepping out, please stay masked up.